from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, it looks like we are in for a busy holiday travel season. Airbnb is preparing a massive share buyback and anticipating the best revenue in the company history in the current quarter. We will get into the details. Plus, a beat for Uber sends shares soaring, almost 19%. My conversation with CEO Dara Khosrowshahi about the shift in demand, supply, and whether Uber really is, as he says, recession-proof. And the results are in. Bloomberg surveyed more than 1,500 investors about the Musk Twitter saga, and only 1 in 4 believe the world's richest man will actually end up shelling out that $44 billion. We'll talk about the implications for Musk, Twitter, and Tesla. All of that in a moment, but first, big swings through the trading session today with markets on edge as House Speaker Nancy Pelosi arrived in Taiwan, and the Fed signaled more rate hikes to come until inflation is under control. Our Ed Ludlow here to walk us through the day, and a lot of earnings, too.
And a lot of earnings to get through first. I mean, look at Airbnb, down almost 9%. Kind of a mixed bag because they beat on revenue, but bookings came in softer than expected in the quarter, but expectations very high. And as you said, the outlook for the year in terms of travel demand looks good. Still, investors not hugely impressed, even with a $2 billion share buyback, although it's worth noting there is an employee share issuance that might slightly offset that. AMD, really interesting as well, gave an outlook for the current quarter that was weak compared to what the street was looking for. There are signs that there is a drop in demand for PCs in particular. There was a hope that AMD would take market share from the likes of Intel, who performed poorly in the quarter, but still suffering from the same issues with a lack of PC demand. One surprise, PayPal up 11.5% in after hours, doing a much bigger share buyback, $15 billion. Elliott Management disclosing a big stake in the company, and also outperformance from the company really putting into effect cost-saving measures very effectively. As you said, though, it was a very busy news day. The story being Nancy Pelosi, U.S. House Speaker, going to Taiwan, those geopolitical tensions causing stocks to swing between gains and losses, and also a lot of Fed speak. And basically where we stand is the idea that the Fed will continue to raise rates until inflation is under control. That's the latest thinking. You look at the NASDAQ 100, marginally down 0.3%. Philadelphia Semiconductor Index basically flat, and again, yields kind of hovering around 2.75% on the US 10-year Treasury. There was other news and other stories in play as well, and you can't forget how busy this earnings season is. You look at some of the names that were gaining on Tuesday. Uber up almost 19%, really strong performance in the quarter. Demand seems to be there, but they also had the lever of higher pricing and discipline, which helped boost the bottom line. Pinterest, a real surprise given what we've seen from Meta and Snap, that they were able to do well in a difficult ad environment. And then there's the big Bloomberg scoop that, according to sources, CATL, the world's biggest maker of EV battery cells, has delayed a decision to announce a North American plant because Nancy Pelosi has gone to Taiwan. They don't want to get in the middle of the geopolitical tensions between China and the US. Two stocks we saw drop, or at least pair gains in Tesla's case, were Tesla closing up 1.1%, but Ford dropping by as much as 1.2% after we published that story. And of course, CATL has contracts to supply EV cells to both of those names.
All right, Ed Ludlow, and you were a big part of that Bloomberg scoop. Thank you. We're going to talk a little bit more about that one later in the show. I do want to talk a little more about this big visit. U.S. House Speaker Nancy Pelosi touching down in Taiwan. This makes her the highest-ranking American politician to visit the island in 25 years. And the timing of her visit is particularly sensitive for China, coming one day after the 95th anniversary of the People's Liberation Army. I want to bring in our Ian Marlowe, joining us from Washington, who's been covering the story and how it is developing. Ian, talk to us about just how significant this visit is and what is at stake. We've got Isaac Stone-Fish, the founder and CEO of Strategy Risks, here as well. But Ian, I want to start with you because I think it's hard to overstate just how significant this visit is.
Yeah, I think it's significant for a couple of reasons. I mean, obviously, she's the highest-ranking elected U.S. official to visit in 25 years since sitting House Speaker Newt Gingrich went in '97. But it's also a sensitive time in U.S.-China relations. You've got forces on both sides. In the U.S., you've got midterm elections. You had a lot of debate about whether she should go or not go and whether that would look weak on China. And then in China itself, you have Xi Jinping kind of balancing COVID zero policies with a bit of a slowing economy, and also a really important party congress coming up later in the fall, where he is expected to secure a third term. So you've got a lot of sensitive dynamics internally, and then internationally, we just have a situation with the U.S. leaning on China over Russia and the war in Ukraine. You've got a lot of high-level dialogues that haven't particularly moved the needle on the Biden administration's China policy. And then you're playing with this extremely toxic situation where Taiwan is just the most sensitive issue in U.S.-China relations. And Pelosi visiting at this point, with the rhetoric cranked up on the Chinese side in particular, and U.S. officials kind of failing to calm down and kind of convince the Chinese side that they're not trying to erase the status quo here. It's kind of got a bit of a mix where we're now seeing some of the most extreme sort of Chinese military responses since the mid-90s, in decades.
Now, Isaac, China has already announced these various military drills, missile tests surrounding the island. How much retaliation versus posturing are you expecting to see?
Companies should fear retaliation asymmetrically. So worry less about military drills, more about executives from U.S. corporations getting arrested or detained or harassed in China, or Chinese companies treating U.S. companies differently, or Beijing suddenly discovering that a major U.S. corporation committed tax fraud or has some irregularities in their books. Beijing loves to play it this way so that there's plausible deniability and so that it reminds the business world that in Beijing's mind, the business world is also responsible for what the US government is or isn't doing.
We've already seen some retaliation from this big battery company that's pushed back its plans to announce a big plant in North America. Of course, Taiwan is a huge tech hub, a huge spoke in the global supply chain. What kind of disruption, potentially longer term, Isaac, do you think there could be to the global and tech economy?
It's hard to imagine a more concrete reminder that investing in China, Chinese supply chains, US-China relations will be unstable for the foreseeable future. Base case now is these regular fluctuations, the regular risk of not getting the goods when you need them, not being able to parse or really understand Chinese policy. So people just need to throw out their old assumptions and work with the assumptions that supply chains will continue to be disrupted. Certain companies that say they're going to do something won't be able to do what they're saying. And not to be alarmist, but it is very possible that moves like these do lead to a war, or at the very least a proxy war between the US and China. And if that happens, all of the assumptions underpinning US-China investments for decades will be written off.
Ian, talk to us about the plans for the rest of this trip and the kind of signaling you're expecting to see, not just from Beijing, but also from the White House.
Yeah, I mean, I think we've seen the White House playbook over the last couple of days. There was a shift from, denying that the trip was even happening, possibly the worst kept secret, given it was the most tracked plane, almost in history here. I think at the moment we're looking at the White House shifting to putting the onus for escalation on China itself, saying Pelosi's trip, which we didn't have any say over, doesn't move the needle. It doesn't change U.S. policy towards Taiwan either way. And so it's the kind of ball is in China's court. So the amount of escalation we see, and some people are talking about the military exercises off the ports and off the coast amounting to a sort of an effective sort of temporary blockade. We're also going to see missiles potentially crossing over Taiwan and landing off the coast. So there's a potential for miscalculation. I think at the moment we're just kind of waiting to see how long this lasts. We know there's going to be drills, for the next few days. And now I think it's just a matter of seeing whether China's telegraphing of this stuff in advance is enough to allow U.S. officials to sort of manage the situation so that there's no, as they always talk about in U.S.-China relations now, to make sure there's no miscalculation, and veering the competition into conflict, as they also like to say.
Isaac, U.S.-China relations evolve over decades. What kind of inflection point do you think this is going to be? How long potentially could this reverberate, if you will, quickly?
I don't think this is going to be an inflection point. I think the inflection point is with Xi, it's with Xinjiang and Beijing's decision to put upwards of 1 million Muslims in concentration camps and the potential for Xi to get 3 terms for the 3 major positions in the Chinese Communist Party. That's the change. That's the moving of the status quo. If Beijing decides to invade Taiwan, that'll be a massive upturning of the status quo. Pelosi visiting, not all that much of an inflection point.
All right. Thank you both so much for weighing in here. Strategy Risks CEO Isaac Stone-Fish, along with Bloomberg's own Ian Marlowe. Of course, we're going to continue to follow every detail of this visit as it plays out. Coming up, Airbnb readies a $2 billion buyback as travel continues to rebound, but not enough for investors. Shares down after hours. But it was a big spike for Uber after reporting record bookings and more than doubling revenue. We're going to hear from CEO Dara Khosrowshahi later in the show. This is Bloomberg.
The marketplace is more balanced. The number of new drivers that we're adding in the US is up over 70% on a year-on-year basis. Surge is down, ETAs are down. So the business is really hitting on all cylinders, and it's reflected in the stock price, which is great.
Airbnb shares down in late trading after reporting second quarter results. This despite the home sharing giant saying revenue in the current quarter will be the highest in its history. Brent Thill, Jefferies managing director and analyst, joins us now to discuss. So look, you've had Airbnb benefiting from the travel rebound, but investors not happy with this report. Why is that?
Bookings actually fell, Emily, for the third quarter in terms of below consensus, about 5% below where the street was at. And I think ultimately there's also a fear that this was the summer of travel, that everyone went to Europe. You can see local destinations inside California, for example, saw their bookings down, but Europe saw this huge boom. Many of us, including my own family who went to Europe, came back and started to look at our credit cards and say, wow, okay, we haven't been anywhere for a couple of years, but look at the bill. And so I think there's perhaps a little bit of a travel hangover coming in the fall into the winter. And that may also be a fear that many investors that are in my position now have said, hey, I just took the big trip, time to tap the air brakes and put money into other things. That's one element. I think ultimately the macro condition is starting to show signs of weakness. You're seeing gas prices and the shift where they're spending dollars. Walmart called this out. A lot of other companies are calling this the shift out. Williamson or Restoration Hardware, obviously saying it's not going to be as good in the back half. You're just seeing across many consumers. So we call it a discretionary recession that many of us may start to rethink where these dollars, say that Airbnb for the most part are, is spent money that is for fun. It's not a must-have. It's a nice to have. They'll argue otherwise for myself, but what I'm trying to put in is why would the stock be down? Why would people be bearish from here? I think those would be the reasons to be bullish. Obviously, they're in an incredible position, amazing management team, incredible selection of and portfolio, and I think they're really innovating on the platform. And there's just incredible innovation relative to any other consumer brand you travel to on the web. I still think this is the best UI, best experience, some of the best content.
They did come out with categories, which was their big design change in the last few months. You do cover Uber as well, and I'm kind of interested in comparing them. But first, I want you to hear this quote from Dara Khosrowshahi from our interview earlier today. He has said in the past he thinks Uber is recession-proof. Take a listen to why.
Because we're in multiple businesses, both in mobility and delivery, I think we have the kind of business that can perform in all weather, but at the same time, we are being disciplined in terms of costs to make sure that as the environment, if it gets tougher, we are prepared.
Brent, you saw Uber's numbers today. Do you think Uber really is recession-proof? And is it more recession-proof than Airbnb?
I think to some degree, because we're starting to go back to work. We're going back to events. We're traveling to kids' sporting events. Like we're using their transportation, not only the cars, but the bikes and scooters. And again, I was a huge adopter of the Lime scooter line this summer with my family in Europe, and as a part in the partnership with Uber. And I think ultimately, I agree with that to some degree. I think ultimately the question mark is going to be around the discretionary travel. And again, when we look at Airbnb, if you look at other travel names, if we start to see a little bit of a travel hangover post the summer, there could be a little bit of a setback on that side. The positive thing for Uber is employers, including our own employer, is saying, get back in the office. We need you back multiple days a week. Obviously, we still have COVID cases flaring, and I think ultimately people are still reluctant to want to be in mass transport in a big way, and they feel comfortable, perhaps being in the back of a car going into the winter if we'd see another phase of COVID cases. So I think, look, I don't disagree with them. I do think there's an element of the business that could feel the pain. The one thing that's going for Uber right now is evaluation. It's the worst sentiment of any internet company and perhaps any tech company we cover. And the sentiment going into this print was awful. And now they're showing cash flow and they're effectively doing what we think is the right thing. It's just not a top. It's got a bottom line, and they're showing they can be very profitable with their network.
Interesting. All right. Brent Thill, Jefferies Managing Director, thanks for giving us your quick reacts on both of those companies. Coming up, a tale of two coasts. Uber is seeing a slowdown on the West Coast, but a pickup in the East. We're going to have more of my post-earnings conversation with Uber CEO Dara Khosrowshahi, who was quite happy about the stock pop when we talked this morning. He's coming up next. This is Bloomberg. Uber defied inflation in the second quarter, reporting better than expected earnings. Shares popped on that news that Uber's gross bookings, including ride-sharing, food delivery, and freight, rose 33% to an all-time high. I spoke with CEO Dara Khosrowshahi about everything from surge pricing to a slowdown in demand on the West Coast. Take a listen.
To some extent, it's a continuation of the last few quarters, but we're really hitting a scale point here. Like you said, $29 billion in gross bookings, up 36% on a year-on-year basis as it relates on a constant currency basis. Our EBITDA, $362 million, well above our guidance range. And the guidance that we gave forward was well above street estimates, et cetera. So an indication of anticipated strength coming. And then a really important factor for us is we're free cash flow positive, $382 million in free cash flow. Which is a big positive factor in our being self-sustaining and profitable going forward. And when we look at the environment, the marketplace is more balanced. The number of new drivers that we're adding in the US is up over 70% on a year-on-year basis. Surge is down, ETAs are down. So the business is really hitting on all cylinders, and it's reflected in the stock price, which is great.
I do want to ask you a little bit about the broader environment, Dara. I still hear people say Uber is expensive, and we're seeing Uber benefiting from this when you look at your earnings and the bottom line. How do you think about this dynamic longer term? Do you worry at all about alienating customers when they're already getting squeezed, given that this is the worst inflationary environment in Uber's history?
Yeah, I think inflation is hitting all of us, whether it's grocery prices or fuel prices. And remember, fuel is a big component of our driver costs. So that affects Uber prices as well. And you do see it in our results. While trips were up 24%, which is really, really healthy growth, gross bookings were up faster than that, which indicates some inflationary effect on our results. I think the good news for us is that surge levels are actually coming down, ETAs are coming down. So as the marketplace becomes more balanced, we actually see strength in terms of trip growth going forward. And we're hoping if we do our jobs, and so far so good in onboarding more and more drivers, that prices on Uber will ease going forward. At the same time, drivers will make really strong earnings as well at the same time.
We've heard so many dire warnings about the economy. Jamie Dimon has said he's preparing for an economic hurricane. I just spoke to Apple CEO Tim Cook, who said, he plans to be deliberate in Apple spending. You've said in the past that you think Uber is recession resistant. Do you still believe that if we continue to see these downward trends? And what is Uber's strategy to navigate continuing downward trends?
Well, I think you're certainly seeing it in our results, which is there have been a bunch of earnings results out there, and sometimes they've been less than great. I think Uber's earnings have been terrific in every way. Top line growth, profitability growth as well. At the same time, we are being disciplined in terms of how we grow going forward. This is why our margins are improving so much on a year-on-year basis. Free cash flow is now positive as well because of the scale that we have. Because we're in multiple businesses, both in mobility and delivery, I think we have the kind of business that can perform in all weather. But at the same time, we are being disciplined in terms of costs to make sure that as the environment, if it gets tougher, we are prepared.
You mentioned on the call that West Coast markets are taking a little bit longer to come back. And I'm thinking about San Francisco and how it's been a struggle to get workers back to the office. How are you thinking about this and Uber's, for example, Uber's own flexible work policies? Do you see the flexibility that you're giving workers holding up into next year, for example?
It does feel like a tale of two coasts. When we look at the East Coast, New York, Miami, even cities, Atlanta, Austin, Dallas, our business is coming back, is roaring back at this point, and we feel great about that business. Now, the San Francisco markets, Los Angeles, Seattle, they're certainly coming back. But when you look at the absolute levels versus pre-pandemic levels, it's a very, very different story. And we'll keep pushing, and we will do our part to make sure that we got ample supply in those markets, and the service works very well.
You can check out the full interview with Uber CEO Dara Khosrowshahi at Bloomberg.com. Coming up, the results are in. Bloomberg surveyed more than 1,500 investors about the Musk Twitter saga. We'll tell you where they're placing their bets next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. I want to get back to our top story, and that is U.S. House Speaker Nancy Pelosi's visit to Taiwan. We are already seeing a major company react in a Bloomberg scoop. CATL, the world's biggest maker of EV battery cells, has pushed back plans to announce a North American plant because of this visit to Taiwan. Our Ed Ludlow helped break this story. Ed, what exactly do we know about this decision?
Yeah, so sources say that CATL was considering sites in Mexico and the United States. As we reported a month ago, they were close, they were agreeing incentives, they were choosing their preferred site, and given the geopolitical tension between the United States and China due to Speaker Pelosi's visit to Taiwan, they've decided to push it back to September or October.
So they're not necessarily saying this is not going to happen. It's just the announcement has been delayed.
Exactly. So there's a commitment from CATL, according to sources, to do this, right? Their key customers are here. They're a big supplier to Tesla for Tesla's China-built vehicles. They have an agreement to supply Ford in the future. And as we've reported, Ford and Tesla were kind of key to those talks. But it's too hot right now. And they are also trying to think about potential incentives in the background from the federal government here in the United States. They just don't want to get caught up in this with what's happening.
How strategically important is this company to, say, a Tesla or a Ford?
Yeah, the reality is CATL is a Chinese company. It is the kind of crown jewel in China's EV industry. It's the biggest maker, as you said, of EV battery cells. But the issue the whole industry faces is there is not enough supply. We need more battery cells, more players. And having that CATL plant, whether it ends up being in the US or in Mexico, nearer to where vehicles are actually being built by Tesla or by Ford is so important. If we've learned one thing over the last 2 years, it's supply chains can unravel really quickly overseas. So onshoring this production would really help. Now we have these geopolitical issues in the way.
Long term, though, are you seeing this as a company that could have a very significant presence on this side of the Pacific Ocean?
So the commitment that they're making initially is $5 billion. That gets you quite a lot of factory, quite a lot of plant. The footprint that we've reported on is very big. We're talking about EV battery cells at a mass scale and for multiple players. Think about the gigafactories, for example, that Panasonic has in Nevada, and others have done deals on the East Coast. So this is big and it's important.
All right, I'd love them. Thank you. Well, few Bloomberg terminal clients think Elon Musk will be forced to own Twitter by the end of this saga. About 75% of more than 1,500 respondents, who include portfolio managers and retail traders, say Musk won't end up owning Twitter. The deal that led Musk to offload about $8.5 billion worth of Tesla shares back in April. 1/3 of respondents predict he'll settle with the social media company for more than $1 billion rather than seeing through that $44 billion takeover. Joining me now, Grace Capital founder and chief investment officer Catherine Faddis, who took questions about the survey with Loop Ventures' Gene Munster this Tuesday morning. So what's your take, Catherine? How does this play out in Delaware court?
Yeah, I think I'm going to agree with the respondents. I think ultimately this deal doesn't happen. It's not clear to me why it made sense to begin with. And I understand. Elon Musk is very smart. He took Tesla from a loss-making deal and he's made it a success. He made PayPal a success. Maybe there was a theory he was going to turn around Twitter and, pull something else out of his hat. But apparently he's lost interest, and I think it's time to move on.org.
What does this mean for Twitter? And what would it mean for Tesla?
For Twitter, I think it's been quite disruptive. And I'm almost wondering if they're going to try to get more than the $1 billion. And I think if there was the people who believe in Elon Musk thought, wow, he's going to get involved with Twitter and he's going to turn it into a gold mine. So I think for Twitter, it's not good either way. I think it's been disruptive. I think if there was hope, Twitter shareholders were going to get a lot of money. Now they're not. It's just not good. And I think Twitter's business model is struggling anyway. For Tesla, I think it might be good news because I think it was a distraction. It was a distraction for Tesla shareholders. They want Elon Musk focusing on Tesla, solving the problems, bringing, the wonderful things he's done operationally, supply chain, efficiency, all the great things that make Tesla what it is. So I think it's good news for Tesla.
Tesla has a huge footprint in China, and I'm curious how you think this big visit, Nancy Pelosi going to Taiwan against the wishes of the Chinese government, if there's an impact for Tesla here.
Clearly, there will be an impact because I think China understands the importance of Tesla as an entity. And I think Tesla is in many senses a crown jewel. So if China wanted to retaliate, Tesla would be an easy target. And remember, Tesla has big plans for China. Not only do they produce a lot there, but it was going to be a big market for them. So I think certainly this would keep me up at night if I were on the board of Tesla. But it is what it is, and I think he's going to have to figure out how to move forward.
You wonder if it's keeping up Elon Musk. How dependent do you think Tesla's valuation, SpaceX's valuation is on Musk alone, his cult of personality?
I think currently a lot, because he really does have this fabulous track record. And people look at what he does. He can take anything and turn it into gold. And he's done it. And so he deserves it. He deserves a reputation. But I think a lot of those things can be learned. So I go back to Steve Jobs and Apple. I never thought Apple could make it without Steve Jobs. Guess what? I was wrong. Since 2011, when he died, Apple has beaten the stock market by 1,000%. So there is life after Elon Musk. There's life after all of us. But I don't want to minimize his importance to SpaceX. And I think it's real. I think he really has brought process improvements, efficiency. If you look at the way the cars are manufactured, if you look at the way he's locked up the supply chain for years and years to come with lithium technology. I mean, he's clearly very smart. So he's important.
So does that mean you think Tesla's valuation is fair?
No, I don't think Tesla's valuation is fair. I think Tesla's valuation is overpriced. Yes, I understand Tesla revenues go up 50% a year. If you compare it to Microsoft and Apple, Amazon, those are going up more like in the mid-teens a year, maybe not even that much. So I understand Tesla revenues are going up. But if you look at those other companies, they're trading at 30 times free cash flow. Tesla's trading at 300 times free cash flow. So this is priced for perfection. Nothing can go wrong. Everything has to go right. And I've never seen that happen before. So I think investors ultimately are going to be disappointed. Even if Tesla does everything, every one of its goals it achieves, I don't think investors are going to be happy from here on.
All right. Grace Capital founder and chief investment officer Catherine Faddis, I really appreciate your thoughts here on the show. Thank you for stopping by. All right, coming up, over 100 technologists signing a letter to Congress urging for more skepticism in crypto. We've talked a lot about the optimists. We're going to talk a little bit about the pessimists next. This is Bloomberg.
The no intermediary system does not scale. That 3 to 7 transactions per second worldwide, that's the hard limit.
It doesn't do what its opponents say it does. It's not secure, it's not distributed, it's not reliable, it doesn't scale. It doesn't actually do anything.
They don't actually work for payments if the payments would be processed by the normal system.
I think eventually it'll crash because all bubbles will crash.
Ethereum has been promising proof of stake since basically they started. Wake me up when the transition happens.
The problem is that blockchain adds insecurity. It adds all sorts of inefficiencies. It makes things worse.
It also creates another problem of he who has the gold makes the rules.
Right now, people are losing their money. And people are really getting hurt because there's so much fraud. So I think it needs serious regulation.
From a technological standpoint, there's no innovation. Economically, it is a self-assembled Ponzi scheme.
Nicholas Weaver there, professor in the computer science department at UC Berkeley, along with Bruce Schneier, a computer security professional and public policy lecturer at the Harvard Kennedy School. They're both some of the lead signatories of this open letter to Congress, signed by 1,500 technologists, and urging lawmakers to, quote, take a critical, skeptical approach toward industry claims that crypto assets are an innovative technology that is unreservedly good. Let's break it all down in today's Crypto Report with our own crypto contributor, Shonali Bosick. Shonali, we've talked to a lot of the bulls. I haven't talked to so many of the bears. Talk to us more about their message to Congress.
And what's interesting here too, Emily, is that it's important to remember there's a bit of a war in Washington going on when you think about cryptocurrency. The people who don't want congressmen and women to be supporting them, and the people that do and are pouring millions of dollars into lobbying campaigns to that effect and into political campaigns to crypto-friendly lawmakers. Remember, I talked to Anthony Scaramucci about this earlier this year too, and there are many people who believe that this is going to, like him, that believe that this is going to be a key issue leading into the midterms and otherwise. So what is the problem here for the folks who have signed this letter? Some of the issues are quite technical, and concern about not being able to reverse transactions, concerns about data privacy, and the sense that is crypto something that is a solution looking for a problem? Why crypto when fintech does the job? In the US, we already have digital payments at scale to some degree. It's interesting because when you look at the data from it, it's interesting because, you know, you saw cryptocurrency transactions, Bitcoin transaction volume surpass that of Visa, but really come down a little more this year. I think which will win out at the end is interesting, and which technology will be dominant, the skeptics in this letter really attest to the idea that Bitcoin and frankly blockchain more broadly is not the solution to these problems.
There's a lot of complicated dynamics at play here. We've reported on the revolving door between the crypto industry and Capitol Hill. You've got crypto companies making big donations ahead of the midterms. You've got crypto lobbyists shaping policy. Is there enough skepticism on Capitol Hill of this industry?
I think time will tell on how much there is a push or pull. I mean, you're asking this question where it seems like there are a lot of lawmakers that very publicly go out and support cryptocurrency, but we're also in a regime where the head of the SEC has been cracking down on massive enforcement issues in a way that we have not seen to this scale, and the tensions really boil over. So it's a great question. Where is the support in Washington when so many millions of dollars are going in to support the industry? Remember, this is not a panacea. You're looking at the crypto industry, and really this is a really thorough and long critique of the blockchain technology itself as problematic is really how they're phrasing this, because fraud mitigation is a big issue when it comes to blockchain. Let me give you another perspective here. In a conversation I had with the CEO of NASDAQ recently, she told me that she believes there could be a day where every asset on the planet could be digitized. Clearly, even current CEOs of big financial firms see some use to blockchain technology that these researchers are disputing, but that fraud mitigation part is such a key argument to both people who believe in it and the people who don't.
All right, Sonali, I want to talk to you about another developing story. I just got off a call with the CEO of Robinhood, Vlad Tenev, and their CFO, Jason Warnick. Robinhood announcing they're laying off 23% of the company. Here are a couple of thoughts from Vlad on that call. He said, I anticipated that what we saw in 2020 and 2021 in terms of the market conditions would last longer than it turned out. That's on me. Employees from all functions will be impacted, but these changes are concentrated in ops, marketing, program management. They overhired in these support functions. He says this is to right size and exercise cost discipline. This is a big chunk of jobs from what was a hot rising company, but you know, they've only been public for a year, still a fairly young company. What's your take? Yeah, it's interesting because that comment that you had put out there really has gone fairly viral online. It's being shared pretty broadly, the "it's on me" comment. So if it is on him, then you know what other pressure is there on him to really change the course of this business? They did fall. They pre-reported. Remember, they were not even supposed to report their earnings today, and they did fall short of expectations, including in kind of the core business, that transaction-based revenue, that payment for order flow, money that comes in from the stocks and options business. In addition to, you know, remember that crypto business is still a small fraction of what they make overall when you compare it. You know, the point I've been making all day, Emily, is if you look at FTX, and we know Sam Bankman-Fried is very exposed to Robinhood, FTX has grown massively with a few hundred employees, essentially, a lot smaller, a lot more nimble. But Robinhood has hired many hundreds of people. And now you're seeing such a sharp reversal of that is really going to impact an entire industry here. All right, we are going to continue to watch that one play out. Sonali, thank you for your insight there. Bloomberg's Sonali Basak. Sticking with Robinhood, the company's crypto arm is going to have to pay $30 million, a penalty to New York State. More not good news. A statement from the New York Department of Financial Services points to, quote, significant failures in the areas of bank secrecy, anti-money laundering obligations, and cybersecurity. Robinhood Crypto will also be required to retain an independent consultant to perform a comprehensive evaluation of the company's compliance with the department's regulations. Coming up, Cohesity, rising enterprise software startup, brings in a tech veteran on as CEO. We're going to ask him about the state of the cloud wars next. This is Bloomberg. Cohesity has a new CEO on board, former VMware COO and SAP President Sanjay Poonen joining the data management company as the cloud wars continue in the midst of rising inflation and a looming macroeconomic downturn. Newly minted Cohesity President and CEO Sanjay Poonen joins us now. It's always been good to get your thoughts on big picture trends over the years. And in the middle of the pandemic, I remember reading this story about you. You voluntarily decided to leave your last job and take some time off in the pandemic. And that was kind of a trend among, tech veterans like yourself. How did you decide that this was the right move?
Yeah, it's been great. It's day 2. I've got my Cohesity shirt. I'm excited. But it's been a great year. Sabbatical, almost 20 years since I took one.
What did you learn from your sabbatical?
How to spend more time with family. That's always the thing that all executives hard charging need to do. Spend more time with your loved ones, get to know them. And that was, I think, the piece that you read talked about executives doing that. So it's been great investing in companies. I joined 2 boards, met a lot of entrepreneurs. And it was in that context that I met Mohit, who is the current founder of Cohesity, and I spent the last few months really vetting out. I'd heard great things about them and followed them from VMware because they're a big partner of ours. And these guys have the best tech in the platform, obviously doing incredibly well in data management, data security. And a few weeks ago, I decided to say yes, and today's day 2.
So do you think burnout is real and that more tech executives could use a break?
I think all of us need to build work-life balance into our lives, so it isn't burnout. I wasn't, taking that time for burnout, but when you do have a point in time where you can take that time off, what's the things that are closest to you? Whether it's family, whether it's a hobby, whatever it is, and that's what I was very fortunate to be able to do. But I was also felt there was a lot of gas in my tank. I wasn't ready to retire for life, and I want to get back in the saddle.
So what's your take on what's happening in the big cloud wars and the trends that we should be watching, especially as, rising inflation, all of these businesses talking about being more disciplined. We just talked about Robinhood laying off 23% of its workforce. How does this play out in the enterprise spending market?
Yeah, and the point is it's enterprise. The B2B enterprise side of cloud is doing well. Just look at the recent results and even the last 3 quarters of Amazon, Azure, Google. I built relationship with them. I think that also has a tremendous opportunity for us at Cohesity because we're at the junction of data, cloud, and security. So I think cloud and cybersecurity are doing well. So if you're in those sectors in B2B, there's some resilience. You have to prepare for potentially a recession, whether we go through ones. You've got to be careful about your spending. This is a smaller company than what I've seen before at VMware and SAP. But if you've got great customers like we do, a Global 100 customer told me they haven't seen tech like this, Emily, since VMware 20 years ago, Amazon 10 years ago, and most recently Cohesity. That's the list of customers you want that will take you through even tough times.
The huge news today in the world and also the business world is this visit by Nancy Pelosi to Taiwan, which could have broad implications for the U.S.-China relationship and the tech industry, which obviously has deep ties to China. What do you think the longer-term implications of this are? As a business leader, does it worry you?
I think we have to have an and policy. I'm super excited the CHIPS Act was signed, and it really strengthens companies like Intel and all the ones that do manufacturing. That's good for us. But we also need a strong tie with Taiwan and Taiwan Semiconductor. They also are somewhat of a beneficiary there, but a strong relationship with especially Taiwan Semiconductor. That's super important. Chips are inside every fabric of our life, whether it's cars or whether it's healthcare devices, whether it's your smartphones. And a strong relation with Taiwan and US, I think, signals to other people who may not want to see that happen that we're standing by our neighbor and friend.
How concerned are you about a recession? Are we already in a recession? Should they just call it?
I'm not an economist, so I can't speculate. Many people do. I certainly think you have to brace yourself when you have these sort of trifecta of inflation, war in Russia, Ukraine, all of these kinds of factors and, the currency issues. So you have to brace for yourself. And what do? The strong should hopefully get stronger. If you're a company, you learn how to. I've seen this in 2008, and I saw this in 2000. It's not the first one I've seen. I think great companies get stronger. Some great companies were born during a recession. You talk to Uber. Google was formed in 2000. So I think great companies. Uber was in 2008, and Google was 2000. So that's my message to our employees at Cohesity. Great companies can thrive even further if you're focused on your customers, if you use the ecosystem to force multiply you, and you keep retaining and recruiting good people.
All right, Sanjay Poonen, CEO and President of Cohesity, will be watching you on your next adventure. Thank you.
Thank you very much, Emily.
And that does it for this edition of Bloomberg Technology. Tomorrow, I'm going to be speaking with Airbnb CEO Brian Chesky, also Anthony Noto, CEO of SoFi, post earnings results, and, well, it's a big day. MicroStrategy's Michael Saylor about his plans to step down and focus more on Bitcoin acquisitions. Definitely a show you don't want to miss. And don't forget to check out our podcast wherever you get your podcasts. I'm Emily Chang in San Francisco. This is Bloomberg.